The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. We have the Dow right now up 62, Nasdaq's off 15, S&Ps are off, let's see, where is she? She's up 4. We get gold up 10. You get oil flat. Bonds are up 7 ticks. And King Dollar is down 153. Folks, as you're listening to us, come over to our website at TFNN. And if you haven't test drove the Nadex platform yet, hit that banner on the right-hand side of it at the very top. You can open that account right here, right now. They'll put $25,000 of funny money into it. And, of course, we got a nice volatile day out here, and that's one beautiful thing. We got our man, Mr. Darrell Martin. And don't forget, folks, Darrell has an outstanding show each and every trading day right here at TFNN, 1 to 2 Eastern Standard Time. It's a phenomenal time, particularly for him to be on, because that's when the news comes out. And inside that Nadex platform, bottom line is that you're just looking for volatility. What's going on, man?
How's it going, man? Gotta love all this volatility we've had this week. We've had some good movements and some great plays all week long.
There's no doubt, man. Let me say, I'm simultaneously doing this.
I know, right?
Because what's happening, folks, is
where's the money?
You got it. What has happened here is that you had the market pop. The NASDAQ is really weak. You know, and the roll is happening out here in the NASDAQ. There's no two ways about it. And it's just going to be this year's. The S&P starting to crack right now. So, of course, I am specifically looking for a trade right now, ESM4. And, yeah, the first leg down was pretty good. So, let's see what we got here. So, you had the pop. Look at this, man. It's amazing how they get. Yeah, this is going to fall apart. Interesting. Okay, so the question is now, where is it going to fall apart to? We're at 1869.50. So the question is that do you get 1880? No, 1866. That's not enough. I know, but you know what you could get out of this? 1856. Let me pull this up. You need fast fingers out here, folks. I need fast fingers right now.
Oh, I know, man. These things.
And folks, once you get the account up, what you do, come over to our website at TFNN, and what you're going to want to do is you want to test drive Darrell's analyzer. So if you can just explain to them what that analyzer does, Darrell, that'd be awesome.
Well, like you said, you need fast fingers when you're trading, right?
You do.
And you spend enough time analyzing the chart, you don't have time to figure out which of 100 contracts you want. So the analyzer basically it just scans, it filters for you. So when you're like, hey, I want to go short, you can find that best trade instantly. You don't have to calculate math. You don't have to do anything. It's just, there it is. It's right there. And so, I got it right here. If if you're watching online, if you're not, I can pull up the spread scanner, the binary scanner, or whatever for Nadex. Completely different instruments. And the spread scanner is a lot more like trading the futures, except for you don't have to have stops and you put up a lot less money.
Yes.
And so I can go in here and just say, hey, you know what? I don't want to risk more than $100. And I want at least a 1-to-1 profit potential, and I want to sell. And then you just choose what market you want. I just want the S&P.
Okay.
All right? And then you scroll right down, and it's going to show you, hey, here's the 3 contracts that exist right now for the S&P for today. We've got an 11 a.m. and 2 4:15s that meet those requirements.
Yes.
If I didn't have that on there, we'd have a lot more possibilities.
Right. So let's stay with that S&P right now, because where my head's going with this, ESM4. Let me just, I want to sell these things. ESM4. Real question is going to be, what one am I going to do? So
it's always the question, right?
It always is the question. It's crucial to understand what your target is, folks. Okay, and the time frame.
Definitely.
Yeah. So.
And we talk about that a lot on the Diagnostic Trading Hour, going in and have that expectation.
Okay, so here, let's go. Yeah, man, 18. Let me go look at the FTSE for a second.
Uh-oh.
Well, what I wanted, I'm just looking here because I want to see just how it's acting over there right now.
All right. We're going to come back to that. I want to get your input on using the FTSE to help out with other indices.
It's just it's a broader indice that once that baby starts going, what happens, because they're so many hours ahead of us, they're 5 hours ahead of us. What I like to see is that, has it already come into a swing? Has it failed to swing, or was it successful? You know what I'm saying?
Right, exactly.
So what tends to happen when you see that, it's like, okay, well, the probability goes up that we'll end up going into a swing, it be successful or fail. Okay, so this is going to be good. I think I'm going to get a shot at these E-minis. Okay, so we got a little bounce right now. So, okay, so let me see something. We're at 1870. Oh, I'd love to see it bounce to 1872. Okay, so let's get over to these contracts. So if I take, we're at 1870, it looks like the 10 to 12, what's it, 1875 to 65, that's not good enough. The 8 to 4, what do you...
The 12 really isn't coming up with anything right now.
No,
just,
it's not.
Just based on where the market was and everything, you're right there. So it's all, based on where it started and everything else. And we just started on those 10 o'clocks, so you're going to have more premium right in there, especially with this volatility in the morning.
Right.
Really, I'm looking at either 11 or 415s. It depends upon, what you're trying to accomplish right there. So
11's going to be too quick. Let's go to 415.
Okay, 415s, you're definitely going to do the wider ones. You want those 400-point dailies because it's the exact same risk, but it's $100 more profit potential.
Now, see, this is insane, folks. Okay, this is where this action really hits, meaning in this analyzer. So they're 1870. Oh, look at that. Okay. So at 1870, I'd be giving up 4 points. Interesting, right? That's a lot of time, but that's 4 points. 1890.
Yeah, there's a lot of premium. They're pretty proud of their premium at the moment.
Yeah, they are. So I got to let
They're nervous about something. So
it is, folks. And so what happens is this: I'm not going to give up 4 points. Because what happens is that it's a waiting game here, folks. That's what it comes down to.
Something else I'm looking at right now, like I'm big on expectation statistics. Yes, the whole diagnostic thing.
Yeah.
And our volume right now, I mean, this morning we had some good pump right there, but like right now, just to sort of show you what I'm looking at on my screen, we haven't really exceeded any expected, but like we're right at the expectations of volume right at this time of day on like 4 minute and 10 minutes.
Yeah.
Okay. Like even the last 10 minutes, like, except for right there at the open.
Okay.
We haven't exceeded the volume I expect for this exact time of the day, this exact day of the week.
Okay.
And so that doesn't really give me a lot of confidence at the moment of just a drop yet.
Yeah.
So what I like to do is I like to see a down close where the volume is being exceeded based on versus the expectation of volume.
Right.
So, and the reason the reason you're giving up so much too, just to look over at the scanner again, is they're out of the money. It's not like it's just like this massive premium. Okay, so right now we have 5 points that we're giving up, but I mean it costs like $38. So, which is basically $35 now. So it's basically like $35 of premium. It's an out of the money option.
Yes.
And so it's just out of the money. And to visually show you what I mean, which is a really cool thing about the scanner here, if I click on this, what you can do is I can just choose like the instrument I want to look at. Okay. And we can go up and we can actually see the relation of the market. It's at 1871, so see like we're higher than the ceiling. See where it's 1870?
Yes, I do.
And it's almost hard to see because it's such a wide spread. I can there's a couple ways I can make that easier, but I'm going to choose the buy and sell just for a second, okay, so you can see what I'm talking about. And I'll just grab one of these. They'll push that over. Okay, so right there, it's really zooming in to make it as easy as possible to see on Tiger TV.
Yes.
That gray line where it changes shading.
Yes.
That's the live S&P price.
Okay.
So we can't display the actual price, but we can show like in relation to.
Right.
So, the data fees and all rules and all that.
Yes.
And so like right here, you can see it's just barely above 1870 right now, which is 1870.25. So let you see it's right there. So if you think about any kind of option for you option traders out there, you know that the maximum premium always exists at the money.
Hey, right? I just found one. I got one here. Oh, I'm glad you kept talking. And I guess no, seriously, man, because what ends up happening here, folks, is wicked. Is that Now, this is here. Walk me through this, because, see, what's going on here, go up just a little bit more.
Let me go down here. We're looking at just cells, right? So
you know where I'm going. I'm going to this 11 o'clock one, man. Now, this 11 o'clock one.
And now you're on the 11s. All right. So
well, yeah, because what's happening here, so watch the 11 o'clock one, folks. I can risk $110 and make 800. And, you know, now, time-wise, I'm killing myself. Not killing myself, but the thing is set up kind of nice here. Let me see. Sell 10. Yeah, so it's $11 for 89 right now. Or $1.10. Okay, we're gonna wait just a little bit longer, because I think we're gonna have here, folks. What I'd like to see is this pop into the 1172. I mean the 1872.
There you go.
Yeah.
And so now, which exact 11 a.m. just to make sure I'm on the same page with you?
I have the.
Yeah, I'm assuming you mean the 1870 to 1860.
That's exactly what I have. The 1870,
Yep.
1860. So I only can make 10 points, folks. But man, I like that. I mean,
you're talking 10 points in 45 minutes.
Yeah.
You know, how many people are making 10 points in a day, much less 45 minutes?
No, right. And
so,
I don't.
Yeah.
Where my parameter is going with this is that I'm only risking $110. And if listen, I make 200, that's great. But I only can lose 110. I can lose $110 all day long. You know what I mean? That's kind of what I really like.
Well, and one of the things we've added in on the scanner over here, let me show you this, too. This is pretty sweet. Go up here. You choose live or demo. Okay?
Yeah.
We go down to this contract we're looking at right here. And let's say you want to see it hit 18. Let's just say, like, 1872 really was your trigger.
Yes.
Okay? If it hits that, you're like, I want to go. And I don't want to miss it. You know, I'm on commercial break. I'm talking on the radio.
Right.
Whenever my kid walks in the room.
Right.
We added this stop trigger function over here.
Okay.
And we could actually go in now, and you could say, if it hits 1872, then sell it 10 ticks off of the market, because you're a limit order, so it'll give you the best price available.
Yes.
And I can activate that stop trigger, okay?
Sweet.
And it'll automatically submit my limit order for me.
Okay.
Now, I'm not saying obviously, me and you are going to watch, but just in case, you're worried about it, you can actually, that's a new function in there now with the stop trigger built in.
That is sweet.
Yeah, pretty cool.
Okay, I just sold 20 of them. That's it.
Who needs a stop trigger, man?
So, well, you know what happened? I'm looking at it. So the risk is $320 now, folks, for $1,800, $1,850 or something. So that's not bad. Now I only get. Let's see, what time is it? It's 10:19. Okay, sorry, folks. Now we can start talking.
Okay, show's back on. Yeah. Okay,
God.
so. All right, so you got those in there. We're good to go.
That's to me, man. We'll find out how this gets out, but I love the idea that you're talking about. What's really cool here, folks. Okay, yeah, that risk there was all of what was it? $9 a contract, $9, $18, $10. No, it ended up being about $13 a contract.
Yeah,
that's amazing. You stay right there, folks. Darrell and I are coming right back. Dow's up 48, Nasdaq's down 18. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now up 48, Nasdaq's down 18, S&Ps are up about 3.5. And folks, if you haven't test drove the Nadex platform, come over to our website at TFNN, hit that banner, bring it up. It's a phenomenal platform. And the bottom line is, folks, you can trade one contract at a time, which is just amazing. You get used to it, then you can open it up a bit. But all the tools are here. Darrell has put together a phenomenal set of tools, not just even the contracts. What ends up happening is the deviation levels that are inside that analyzer are phenomenal.
I actually got them right here, what we're looking at right now. The market is pushing on that, and then, if it hits it, it's going to. What's going to happen is it's going to break this expected volume to hit through settlement. And the settlement for yesterday, the CME settlement price was 1866. Okay. So we bust through that thing. It's going to bust right through there. The next level we got is about, 1864 or so from last night's blow.
Yeah, right.
And then we're going down to about 1855 from yesterday's high volume bar. Right. Is that pretty on track?
Yeah, and what happens here, folks, is this. So picture this. I have 45 minutes. Well, what do I have right now? I got...
You got 35 to 11.
I got 35 minutes. Okay.
Yeah.
So what you do also is this, okay? You don't just sit there and wait. Like in my case, what's happening is that right now I get 20 contracts, right? So I'm absolutely going to put a buy-in for 10 of them because the amount of money that was at risk is very short, so I don't have to make a lot of bread just to get my principal back. Because you got to remember something. These contracts are just like options, okay? So they move very quick. Now, when they're moving very quick, it does two different things. You can get money very quick or lose money very quick. So
Right.
if the order is into close, you get any spikes, well, great. You get your principal back, then you can let the rest of it ride, you know. So the key is that the first get-go down, yeah, see, that 1866 is going to be the first one. And I could do, that's what, in fact, that's where I'm going to, 1866.50, I'll put the first to take half of them off, because that'll get me my whole principal back.
Exactly. Now you're basically...
Now I'm rocking with 10 contracts, and, you know, you don't have to let them go to 11. But the bottom line is that if you got the first one covered, then your probability gets a lot better that, you know, you will make some money. And
You also got the psychology out of the way.
Yeah.
You know, because now, like, you know, your risk is taken care of. You get a little profit booked. No matter what happens, even if it flies all the way back, you're free to trade a lot better because you're not, like, you know, just watching this P&L fluctuation all over the place.
Yeah, there's no doubt, man.
And then also, I mean, let's just say it doesn't work out. You still have all your capital to come in on the next play with.
That's
So,
right.
Yeah.
That's right. You know, which no doubt is crucial. You know what's interesting out here this morning? I'm trying to figure out, it seems that, I'm trying to figure out whether some of these quotes are bad. This thing is running around. Like the Dow is really running around, and normally it doesn't jump 20 or 30 points like that, and it does. So you get inside the Dow right now, you get Visa, that's putting 4 bucks.
Well, it's take or swim. It's on there too. Yeah.
It is. So, you know, it's jumping. And United Technologies, that's a sell. Let me look at this for a second. United Technologies, that's a dog. Oh, look at that. Interesting, man. They popped it. United Technologies got to 117.58, folks, and it's already at 115. So what were they saying this morning? Let's see. FAA, who knows? But that's amazing. They popped this thing, and it's United Technologies is a done stock. And they, of course, someone got a gift this morning when that got popped because they sold right into it. Pretty amazing.
I'm trying to see anything. I look at a few different feeds, seeing if anything was like.
And look at it, popped all the way back down again. So in the context we were just talking there, folks, the Dow is at 70, up 71. That went up 100. I had up 105, and now it's back to 78. It's pretty wild, man. Gotta love it.
All over the place. Yeah.
Yeah. No. And what that sets up, folks, is that's going to set up more volatility right now, big time, because doing this simultaneously is pretty hard to figure it out. Meaning being on the air and looking. But
it is a trick, isn't it, man? It's like you try to talk and do it and not mess up and go back and forth, and yeah.
So watch the NDX 100 right now, folks. Okay, this is where we are. Oh, this is a nice place. Okay, so it's hammering right now on the bottom of the swing point from yesterday, and guess what? It's hammering with way too much volume. This thing's going to break. 89.45 is the number. 3.9 million is the take. We're already at 3.3 million. Next bar is going to break it. You stay right there, folks. Darrell and I are coming right back. We have the Dow Industrials up 81, Nasdaq's down 23, S&Ps are up 3.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 110. Nasdaq is down 19. S&Ps are up 4.5, and the NDX 100 is off 25. And the battle line, folks, is out here in an extraordinary way, and it's hilarious because you got to remember something. The Dow Industrials could not get to its high the last time that the markets reached the high, which is on March 7th. The high in the Dow is up there at 16,588. The Dow today is trying to basically keep the rest of the markets up. But guess what? It's the NASDAQ that leads, folks. And the NASDAQ is really having a tough time, which is pretty wild. Just watching this shake out, because the NASDAQ had got over the highs of the last 6 days. They got right into, the composite itself got into 43.44. Which was over the high of the downdraft of the 13th, then just gave it up in spades. So this battle.
Check out right now. You know, talk about the battle line being drawn.
Yes.
You know where we're at right now on the Nasdaq.
Yeah.
1 deviation high to low right now.
Oh, that's cool, man.
So,
okay.
Yeah. So we're at a 0.7 deviation level, but from the high to the low, we're at 1 deviation mark right now. So basically, it's battling it out right at that statistical level, and if it breaks that, then that's, like you said, we get to get a little party going on.
You get action. Yeah, right.
Yeah.
And there's plenty of time, you know, in a Friday afternoon, folks. There's no doubt. So we'll see where this baby wants to shake out. The E-minis are still struggling at this 1870 level.
Yep.
And
they're right there.
Yeah, right there. Let me put this on 1 day, 10 minutes for a second. Okay, so this is the fourth bar. You get the 1870.25. Man, it's right there. What a trip this is. Yeah, this battle's going to be out here for a bit. There's no two ways about it. What we have had is that when you look at the broader, if I just bring up the SPX for a second, and you see this on a basis, folks, if the SPX actually closes where it is now, this would be a failure on the weekly and the daily. The daily, is easy right now where it is because the SPX had already got to the 1883 level. We're at 76 right now. That's a big number. The 1883.97 got over the 1883.57. So if you close here, man, that is a failure on the weekly, which of course makes it more powerful, meaning failure. What's amazing, Darrell, is that, and folks, what has happened at this high is that it's been a continual testing for a month. And, you come off this high with big volume, you come back up again, frustrating both bulls and bears. There's no two ways. And that's what, that's my take, that's what big tops like to do, This one here, no doubt, is... Well,
it shakes all the orders, and that's what they want.
Oh, it does. Totally. It's like, you get up and say, okay, is this thing going to blow by the top and, really go? And yesterday, the financials, you talk about the financials going topside. If you want to see something that's another dog out there, it's American Express, folks. American Express is going south. But guess what?
And all the bank tests came out yesterday, too.
I know, man. I know.
Yeah.
American Express, had that high swing point on January 17th. It got tested on the March 7th, came down. They popped that baby this morning up, and guess what? It couldn't hold. And what had happened is that inside the, like J.P. Morgan, nice ABC structure on the way up, but that ABC structure, it hit the price points. When you hit a price point on the A to B equals C to D, guess what? You do something other than continue at that point.
Right.
Going on that way,
We just had Russell also. It's bouncing off settlement right now.
Is it? Okay.
We got the NASDAQ popping up to that 0.5 dev level, so that's going to be a resistance level, for it to bounce off of. We're starting to get some high selling pressure over on the Dow now. It's actually picking up on the downside. And meaning it's exceeding the expectations.
Okay,
that's so
cool.
Fine-tuned.
So let's talk about that's pretty cool, man. I was looking at that when you were on the air with me the other day. So talk about how we're looking at that, the volume and the expectations inside that deal. Look at this.
So I'm basically going this is the volume I expect on 4-minute bars.
Yes.
This is the volume I expect on 10-minute bars.
Okay.
And by doing this, I can basically see what usually happens on that 4 minutes on that day of the week.
Right.
On that 10 minutes on that day of the week.
Right.
And then on that hour. So I look at hour for total movement, but I use the intrabar for volume because volume, precedes price.
Okay.
Right? And so when I see the volume exceeding the expectations, usually the range is exceeded. All right? So
yes.
See, right here, we just barely exceeded the expected range. That's how far I expected the market to move.
Right.
In the first hour right here. And it just barely got above it. We just barely right there, just on a couple bars, just right above volume, right?
Yeah.
And so right now what I'm looking for is we had that big, strong up move that we were just talking about right before the last commercial break where the market ran up, but then it also exceeded volume down. It didn't exceed it on the way back up. So it's like a fake, pullback there. And then we met volume right now, so now we're just at this battle stage. We're trying to figure out, the market's literally trying to figure out where it's going to go. And the next high volume bar we get, if it exceeds expectations, that's probably where we're going. At least for the next, say 30 minutes or so, which is very important if you're doing, like a 1 hour trade or 30
That's for sure.
Yeah. So I use volume a lot to confirm direction for me.
Right.
And fine tune that. So basically, just say how far do I expect volume to move? And when it's going more, the bar's closing out the direction, and I should expect it to keep going. When it backs off, that's when I chill out. So, and I'll definitely tighten my stops or whatever at that point.
And remember, folks, inside this Nadex platform, you can trade indices, you can trade currencies, and commodities. Okay, so there's a lot of different contracts that you can trade depending what type of product that you like to trade. And if you're if you've particularly, been in the futures market, you'll see all the options market. You'll see that it's a very sweet product to trade very fast markets.
Yeah. If you can trade fast markets with low risk. That's the scary thing about trading fast markets.
No, that's the key.
Everybody wants that movement. They want the speed, but they don't want that risk. You can have that low risk.
That's right.
Like the trade we have on right now, like, where's your stop, Tommy? You don't have one, right?
I know.
Exactly.
That's what's so cool, man. And folks, if you've ever been in the futures markets, you need stops all the time.
Okay, and you got 20 contracts on. You know, you got like a little over $10 risk a piece. You basically have about $250 risk on, right?
Right.
20 contracts is equivalent. It takes five spreads to equal one S&P in the future. Okay.
Yeah. So
that basically means you have 4 S&P future contracts on, with a total of about a $250 risk. So you're talking about a 1.5 point stop loss.
That's right.
And if you're trading the futures without having to actually have the stop loss.
And check this out, folks. And if you bring that into the aspect of how much you normally have to put up in the future market, okay? It'd be it's $4,700 a contract, okay? So bottom line, you're talking about what, 8, 9? You're talking about 18,000. But the thing that's amazing is that you're actually leveraging 93,500 per contract. So you do that times 4. I mean, it's sick.
Exactly. And even if you get the day trading margin, you're still like incredibly less, right? I mean, what would that be? That'd be maybe a couple grand, a little less than a couple grand on day trading margin,
right?
Versus a couple hundred.
Right, exactly. Exactly. Right.
So smaller traders can trade with less risk. Bigger traders can trade with less risk.
That's right.
Smaller traders can actually get into the thing because they don't have to have 5, 10, 20 grand in their account.
Right. To
have proper risk management and because it's not just risk management, it's also margin. So you got both pieces. So
and granted the trade when it got put on we only had 50 minutes, maybe 45 minutes, but the other side of that, folks, the reward could be, 1,900, which is insane. So it's like you can be wrong quite a bit. And in fact,
exactly, you can be wrong a lot. It's like, okay, I lost, but you know what? If I get a couple where it just, because I mean, you get these mornings where it'll break 10 or 15 points. I mean, it just
exactly,
and you just clean up.
And the other side of it, it doesn't necessarily mean also that you're going to lose the full amount. If the S&P stays right where it is right now, I'll tell you, if it's right where it is right now, I would.
Because your ceiling is 1870, but every tick below 1870, you're getting basically, on 20 contracts, you're getting $2.50 per contract.
Right.
So, $45 back of that risk.
Right. Which in this case is quite a bit.
And what we need to look at too is, when we're looking at this trade, it's went up and down like a point or two, like multiple times.
No, it has.
Since we got into this thing. So we haven't got shaken out. We haven't gotten nervous. Our risk never got larger. And this is one of the things I talked about when I first, this was like a year ago.
Right.
It sounds funny, but in some ways it almost makes trading boring because you don't feel that risk increasing.
Right.
Like, okay, I put up $150 or $200 or whatever risk. It's not going up on you. So you don't feel like, oh, I got to worry about my stop loss. Should I move it? No, I shouldn't move it. I know I shouldn't move it. Should I use a mental stop loss? Well, that's really
right.
mental. All these games go away. That's my risk. I got in. That's my trade. It's like setting the stop and walking away.
No, it is.
But better. It's not just like it's not like, okay, I walk away and I come back when I found out I was stopped out.
Right.
I walk away and I found out it ran up 5 points, but it came back down, and I got I made some money, or I lost less, or lost a little bit, or that's all I lost. But the market was. I couldn't have done any better if I was sitting there the entire time anyway, So,
big time.
And you just hop in and look for the next trade. If this one doesn't work out, we're still looking for that short thing. This battle's going on. It's not looking like it wants to get strong. You can always roll into the next one. It's not going to take much to make that money back.
No, it's not. It's not. Particularly because what Darrell just said right here, and this is actually one of the targets in the den brought this up too. In fact, his quote was, it's the same thing what Darrell just said. A market that keeps probing highs without surging higher can give way to the trapdoor selling, and it can. When you have a market that's like this, the bulls and bears are fighting right now, there's no doubt. But we've tested that high so many times that it's like, okay, is there a large operator out there that's just going to throw everything at this market on a Friday? And and when I say throw everything, that could be a bull or a bear. It can be both ways, But they're not going to just leave it.
But this is exactly what they will do. This is the exact pattern you'll see when they're they're getting up and they're just trying to get some buyers in.
Yes.
So they buy it. They do that initial surge up.
Right.
They get some buyers in so they can just start selling to them. And all these people are like, oh, it's going up. And they're buying. And they're selling more and more and more. And then they just drop the whole train of cars, right? They fall on down.
Oh,
so, I mean, that's the right pattern. It doesn't mean that's always what's going to happen. So that's why you want to have like that defined risk built in. But this is how they do it when that is what they're doing.
Yeah,
so
there's no doubt. So if we do go over to that commodity market out here today, so we got, let's see, sugar is off 1.8%. You get beans off 1.7%. Gas is off 1.3%. Copper is up 1%. It's a weak commodity market out here today, no doubt. Cotton's up 0.6. And if we take a look at, what King Dollar had done, and this is important to understand even inside this Nadex platform, folks, the dollar pairs are just great vehicles. And, the surge the last 2 days in King Dollar was pretty intense. So,
now, one thing you mentioned at the beginning of the show, you're talking about looking over at the FTSE.
Yes.
How do you... can you take a moment to explain, how do you look at like the FTSE and the DAX to give you an idea, footprint, like a blueprint maybe of what's coming up?
I'll bring this up right now. So when I bring up the FTSE first. So what you have, folks, is this: is that the first high, meaning January 21st, that was up there at 6,800, right? Well, it came all the way down to 64. And then, which is really unusual, let me tell you, strength-wise, comes all the way back up to the top again, but then guess what? It crashes again. Now, what we did on, the 14th, we came down to 6,500. That was the low. It does a small counter turn bounce. So what I'm always looking at, Darrell, is, okay, how did you go down versus how did we come up? Well, the last swing low that was established on the 4th of February, we had volume of 935 million. When we came down the 14th, we had 850. So then it bounces. Then guess what? Then we come down with 973. What we did out here today is that it was trying to get into the highs of yesterday, meaning the 65.73. You got the 65.71, and then guess what? It just started giving it up. So it's like, okay, when I look at that intraday, I'm saying intraday, we go back to what's stopping this. Like that 1866 we were looking at on the S&Ps? Well, when you go back to the FTSE, what's stopping this from going down is the 1220 on the 20th, yesterday, had some good juice on a 10-minute. It's like, okay, man. So that's when it came down, it was right to 65.37. 65.37, yeah. So that's what stopped it the first time. Now, on the way back up, what you're going to see is what's going to stop it dead in its tracks is 65.50. So when I'm looking at that, I'm saying to myself, right now they're doing exactly what we're doing, and they close at 11. But your probability is still that you're going to run down to the lower end of this, which is the 65.37. You just stay right there. Darrell and I are coming right back, folks. Dow's up 90, NASDAQ making some headway. It's only down 11. S&Ps are up 550. We're going to be coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You get the Dow up 89, Nasdaq's down 9, S&Ps are up 6. Let's go to Lou in Connecticut. Hey, Lou, what's going on?
How you doing, Tom?
We're doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
I really loved this show on Friday. I wish you were here a little more often.
Well, I'm here every day for 2 hours, man.
Hey, I want to bring it to your attention that I don't get it. The QLD's running a premium over the Qs. And, you know, when that happens, I don't think the market goes down.
So you're saying that the QLD...
Yeah, to make it easy for you, I use a 10-day chart, 60-minute. I put fibs on both of them, and you can see how the QLD is running a premium over the Qs.
What is your definition of that? I don't understand what you mean by that.
Well, okay, Tuesday the 11th to Friday the 14th
yes.
is the high to low in the fibs.
Right.
And then if you look at the QLD is more than 50%, is above the 50% level.
Yeah.
And the Qs is below the 50% level.
Okay, now this is cool. Okay, now this is why that happens, though. That is a math deal because of the way that the QLD, okay, is the 200% inverse correlation, okay?
Yeah.
And what ends up happening is that that gets reset every day. And that's what's important about these leveraged products to understand. And that will always happen. Now watch this. If you put up the QID, the same thing would happen. And this is why. Because when you have a choppy market and go sideways, folks, both the bull and bear leveraged product is going to lose money. It's impossible that they don't. Because of the way that if you go up 10% and down 10%, guess what? You do that 5 times in a row, do you think you're even?
The QLD should have some slippage, and the QLD has a premium.
Okay, yeah. We're talking 2 different deals here, man. I can't. If you don't understand how that leverage works every day,
I understand. I just wanted to point out that they didn't read the white papers.
I love it. Okay, man. Listen.
I love you, brother. Thank you.
Have a great one, man. Have a safe one.
Bye-bye.
Bye-bye. This is...
those leveraged ETFs are tricky, the way they work.
Well, what they are, and folks, if you... Right over at our website at TFNN, under ETFs, you're going to see the white papers there, and they do a great job of explaining how they compound on the way up and get defensive on the way down. And if you understand what you're trading, it's cool, you know.
Yeah.
And if you have a choppy market and it goes back and forth, it goes up and down the exact same amount every day, and every day it does something different, guess what? They both are going to lose value. They have to, because, you know, the bottom line is that when you go, let's say we start at 100. Well, if you lose 10%, you get down to 90. You make 10% on 90, guess what? You only go up to 98.
Exactly.
You know, that's just the power of percentages. You know, so be careful when you're doing correlations inside them if, in fact, you're not doing that correlation on a daily basis, because that's all that matters. That is all that matters in the structure of that. You stay right there, folks. Our man, Mr. Basil Chapman's coming up next. Of course, then, let's see. Then, man, Darrell's going to be back.
Yep.
Dave White, I'm going to be back this afternoon, folks. Have a great one. Have a safe one.
All right. See y'all soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.